Welcome YouTube, I'm back again with the fourth video on Zaire's Business TV. Today we are going to discuss my simple, short explanation of the stock market. Let's begin. We're going to start with what are stocks. Stocks are collections of shares, simply. That's it. They're collections of shares. That's how you name a group of shares together. So one company has stocks, which is a collection of their shares. What is a share? A share is smaller pieces of a company that is proportionate. The price of the share is proportionate to the overall value. The price per share compared to the volume is proportionate to the overall value of the company. So simply, shares are smaller pieces of each company. Why do companies issue shares? When a company issues shares, it's called going public. It's an IPO, initial public offering. That's when Uber went public real recently. Beyond Meat, they went public real recently. That's the Impossible Burger, the fake meat. They went public. When a company goes public, it means, for one, they need more capital. It's a way to raise capital. So they want to raise capital. They want to bring on a board of directors. That happens when people buy stocks also. Or they want to expand and inventory, manufacturing, go overseas or something like that. So they may offer an IPO. When a company offers an IPO, they have to evaluate their company and see what is it worth overall. What is the total amount our company is worth? Then that is split amongst a variety. I don't know what the number is or how they pick how many shares it will be, but the price of the share is contingent on how profitable the company is. How much is the company actually worth? That, if you take the price of the share, multiply it by the volume, it'll give you how much the company is worth. So when a company goes public, that initial number that it comes out with when it starts trading, that's how much the company is worth then. So when investors invest, that's how you can have a company that's oversold, overbought, because it's really worth this, but it's trading as if it's worth this. That's the difference. Another thing people don't know or realize is when you invest in a company, if I invest in Coca-Cola, the money that I pay for the stock, the company receives. That's how they raise capital. So most of the time when companies want to, this goes into the question of why you should buy stocks. When a company wants to expand or do more or just upgrade something, right? And they need more capital, so they go and they release stocks and people can buy them. So once they get that money, the name of the game is they'll go invest the money in the right places within their company. They'll take those funds and invest it in the right place in their company, which then should make the company value overall rise. Once the company value rises, if you bought in here and they took that money when you bought in and invested it somewhere into manufacturing or something, new factories, and then the company is now worth more because those investments were successful, you make profit. That's why stocks are a great That's why stocks are a great investment to like piggyback on other companies' success. What does it mean to be publicly traded? To be publicly traded is a company has decided that the CEO now no longer owns the company. He's going to sell parts of the company, part ownership of the company, on a public, like NASDAQ. There's one in Chicago, there's one in New York, London, Japan. When a company decides that they no longer, the CEO has to like give up his rights of ownership to the company. Now I think there's a way to, you only offer enough stock that like covers 50% of the company. I think that's a possibility. I don't know for sure, but it may be. Once you want to go public, you have to put all shares on there. 100% of the company can now be bought and sold publicly by anybody. That's what publicly traded stocks mean. The stocks can now be bought and sold by anybody anywhere. It's publicly traded. Those are really the reasons. Those are the most simple reasons why anybody should invest. If you understand the basic concept of what a stock is and how it operates, it'll help you in the long run when you want to invest. Because then you get into different things like, in my last video I mentioned REITs. Those are real estate investment trusts. A real estate investment trust is real estate companies, for one. Real estate fund. It's companies that have real estate funds, just big groups of money that invest in this and this different like types of real estate. Those companies, they put all those real estate properties together and they take a value of that. You know how we took a value of a company and then they break it down into share prices? They'll take a value of all of the real estate they own, like the base value, then trade that as different shares. So you can purchase a different parts of this big like real estate corporation. So when when they make the monthly premiums and when they sell one for this much price and they make a profit, that stock is now going to go up because the fund value now grows. That's why they trade it. That's why mortgages were traded, because the value of the fund will grow. Anything that holds value and it can potentially grow, there's probably somewhere on the stock market where it's changed. Another option is called ETFs. I also mentioned this in my last video. ETF is an exchange traded fund. REITs are technically ETFs, but there's other types of ETFs. Mortgage-backed securities are ETFs. This means they're exchange traded funds. So they're funds of money, they're groups of money, different capital groups and venture firms and different things. Anything that has like a group of money, there's a value. So they'll take that value, break it down into different parts of ownership, just like the shares are. So then they'll break that down to stocks, to where you can buy and sell parts of that whole value. So when it gets bigger, you can potentially profit too. Most of these companies pay dividends. But that is my simple and short explanation of the stock market. I will come back with a part 2 to go a little deeper in some of these things if you guys want. For now, make sure you're subscribed to my channel, Zaire JMG. I'm coming with more business talks, I have interviews coming on the way, and even more. But for now, thank you.